Okay, there hasn't been, to put it charitably, universal acceptance of the exposure draft. It's attracted some controversy. Well, knowing that the time clock for June 2011 is ticking down, how have the standard setters responded?
Becky, they have responded with some revised, with a revised proposal in the lease area. In February, the boards agreed that certain variable lease payments would be included in the recognized lease-related assets and liabilities using a higher threshold, though, than more likely than not. The threshold that they've proposed in their revised proposal is reasonably certain. Now, reasonably certain in the eyes of many of us is really almost a probable threshold, although they did not use the word probable. They used the word reasonably certain. So if I can just, again, try to simplify this, when I say more likely than not, I'm talking about a greater than 50% likelihood. When I say reasonably certain, I'm running closer to the 90% likelihood. So by increasing the threshold, it should be more palatable to many preparers and users because the more likely than not scenario, as a much lower threshold, would cause a significant amount of subjectivity in the asset and liability amounts. Reasonably certain, on the other hand, should minimize that subjectivity to a great deal.
Well, that makes a great deal of sense to me, John. But what about in terms of the lease term? That seems to be even more controversial than the expected outcome, doesn't it?
Becky, the lease term was terribly controversial. And I remember when I originally read the proposal, and they were talking about the lease term and incorporating information through a much longer time period than I think anybody anticipated. That proposal created many hundreds and hundreds of pages of comment letters related to that. Again, in February, the boards have tentatively decided to define the lease term as the non-cancelable period plus any options where there's a significant economic incentive to extend or not terminate the lease. Now, that sounds a bit vague, but then they went on to say that factors that might create an economic incentive for the lessee include renewal rates priced at bargain, penalty payments for cancellation or non-renewal, and economic penalties such as significant customization or installment cost. Now, while the revised proposal doesn't say this, it reads very similar to the existing renewal criteria for capital lease purposes that are in ASC Topic 840. I think this revised proposal related to lease term will be far more acceptable to practitioners and users in the United States than the prior or original lease term proposal was.